We really sit at the intersection of two major things. One is the financial market's voracious appetite for data, and two is this enormous and growing means of communication, which is social media and what's called microblogging. And so what we do is we basically take this information, we process it, we clean it, and we create signals based on that particular data, and I'll walk you through. So social media, it was very whimsical when it started, and people were tweeting about where they're going for lunch, what products, what gym shoes they're going to buy, but that's really shifted. And it's no longer just a platform for expressing individual opinions. It's a huge source of information. So you have 280 million contributors a day with over 700 million individual ideas, opinions, and things that they're saying. And that's an impossible amount of data to make sense of in traditional formats, whether it's subscribing or listening to TweetDeck or just watching these individual tweets, and that's really what we do. And if you look at these 700 million tweets, what you see is that the red dots overlap very nicely with major financial centers. So a lot of these tweets are coming from places where people talk about securities, prices, equities, commodities, futures, the different data items that, that we would want to capture. So social media is disrupting the capital markets. And if you don't believe me, look back to the Wall Street Journal last week when people were talking about a tweet on Altera being acquired by Intel Communications and the subsequent reaction in the security prices. Example after example after example. And I used to spend most of my presentations talking about the reasons why you should care about social media, and now it's definitely we do care and it's out there. How do we use it, and how can you help us solve that particular problem? All right. So what we do is we harness these messages and turn it into useful information for traders. All right, so basically what we're doing is we're listening to Twitter and StockTwits. StockTwits, if you don't know, is the #1 social media forum for securities. We have another half a dozen individual sources that are going to be putting into our system. We extract all the messages that have anything to do with securities. So it could be $, it could be ticker, it could be major product, it could be company, it could be CEO. Anything that would allow us to identify that as about a particular company or security. We put that data in our database for later evaluation. Now, when I said that I sit in the middle of those two big forces, the key thing that we provide is the cleansing. So anyone that tweets about a particular security goes into our system, and then we evaluate that account, and then we evaluate the tweet. So I'm not interested so much in you buying Microsoft a week ago or something that you did a month ago. What we want to know is if you have opinions on the future direction of an asset, whether it be foreign exchange, an equity, a commodity, whatever. Buying calls, buying puts, miss on price target, raising price target, lowering price target. They're going to kill their earnings. Just all the different topics, and we'll look at some individual tweets that are scored. So we evaluate that, and then we turn it into a series of programmatic metrics. So what we have found in all of our research, and I think you'll see this anywhere, is it's not the raw level of sentiment that's important for securities. And the reason for that is very simple. You get Apple, Google, Facebook, 1, 2, 3 every single day. There's no predictive power in that data at all. So what we do is we look and describe the data in a statistical manner on a standard normal curve. So if you know what a statistical z-score is, that's really what we're doing, is we're saying, hey, this current conversation is more positive than 98% of prior conversations on the individual security. And we do that for individual securities, we do it for indexes, sectors, and industries, and we make that available through an API. And actually, that patent pending is no longer relevant. We got our first patent approved last week, so we were pretty happy about that. All right, so what do we do? And it was really spoken about earlier by Lee, and we don't look at the profiles because we are too hung up on titles. We actually look at the statistics themselves. So these are just some of the criteria that we are using to filter our criteria. So how long have they been tweeting? How prolific are they? What percentage of their tweets would be what we call indicative? How often are they retweeted? Those are all metrics that we're using to evaluate the appropriateness of that particular account to be included in our metrics. And we have dozens and dozens of these rules, and it's about 55,000 accounts that are what we call certified. These are people that are making intelligent commentary on stocks. So then what we do is once we have those accounts and we look at the individual tweets, we actually score these tweets. It's unbounded. It typically ranges, though, from -1 to 1. Here's an example of Palo Alto Networks talking about strong move into new all-time highs. So this is a technical discussion, and they're also talking about their earnings next week. That came in. The raw sentiment, and I made a mistake in my slide, is a 0.33, which is positive, not incredibly positive. A takeover a company would probably generate something around a 0.7, just to give you a frame of reference. And then what we're doing is we're calculating the S-score. And I'm an old guy because I didn't even know who they were. I asked one of my people to help me with this deck, so I do know that they are Dancing with the Stars, so there you go. So what we do is we calculate an S-score. And an S-score is a representation of the current conversation on a standard normal curve. Is that conversation significantly more positive than normal or significantly more negative than normal? And what we found is 2 standard deviations is really where you want to be. And so that's our core metric. And then we have different metrics that we use to describe the breadth of the conversation, the relative number of tweets, how quickly is it changing. So is sentiment making a big jump, which would be representative of breaking information on that particular security. And then here's some tweets. And here's another one. What could be more bullish than Jesus buying calls? The same guy that put up the other deck put this one up too. So here are a couple different examples. So here we have someone buying 500 calls, again with Palo Alto Networks. Here is a technical conversation. And that's what's really interesting about social media is that you all have news feeds on your desk. You all have pricing feeds on your desk. You have volatility. But what social media does is it aggregates all of that information. And being from Chicago, probably the closest analogy that I have in my career is social media is the feeling of the pit. So I remember, and I'm dating myself, but they used to pump crowd noise into the trading desk so you could see what the noise was in the pit. That's what social media is. It's really the feeling of the pit, the energy in the pit. The securities behave differently, and basically what this shows is if you look at sentiment scores prior to market open, and then you look at stocks with high sentiment prior to market open, and then stocks with low sentiment prior to market open, and then compare it to the overall universe, stocks subsequent open to close return, so we don't get the benefit of the gap of stocks that have a high sentiment score prior to market open. The red line is the universe, and then the green line are stocks that prior to market open have a low sentiment score or negative sentiment score. That's their subsequent open to close return. And I won't talk about it here, but there are some sector biases in there. And I have Sortino ratios, Sharpe ratios, all the ratios that I know you guys are thinking in your head, what are they there? All right, so how do professionals use it? So how are our customers using the data? Well, the most obvious example would be a quant group. So we have data down to effectively real-time aggregation of tweets, all the way up to daily. So new content. If you're sales and trading, stay informed of new information. If you're a sales and trading desk, it brings new ideas. So you don't need social media for the top 100 market cap stocks, but where you find predictive power, and I'm done. I'm getting red carded. There you go. And I only know what red card means because I just coached my first 7-year-old girls soccer game last week. So I now know what that means.